know, but today, this webinar, it has been approved for CE. And before I get started in some of the requirements of the CE and what you need to do, you know, this topic has become much more important, and as many of you have kind of reached out to us here at PrimePay in regards to many of the ACA requirements, we felt it probably desirable for you to really take a lot of the guidance and move it into a practical solution. And so today, we want to go over this kind of the payroll fundamentals, but more so how they can effectively help you, help your employer manage ACA compliance. So before we get started, and as long as my computer is working, there we go, I want to go over the requirements here for today's CE. So this course has been approved for CE in the states that are listed. So it's a 1-hour CE credit that is approved in Pennsylvania, New Jersey, Maryland, Delaware, Virginia, Connecticut, Ohio, Illinois, North Carolina, New York, and Missouri. And we are to treat this course just as if we were doing a classroom setting to some degree. So a couple of things that I need you to consider for each of you. Next, you must be registered as an individual to receive the credit. So in order for us to provide you with a credit that you need for one of the states that is approved, you cannot be registered as a group, okay? You can't be viewing this as a group for credit purposes. So you need to register separately, okay, or on an individual basis. One thing that we have noticed, and so just kind of a note, it's not 100%, but we have heard of experienced difficulties when viewing on a tablet or a mobile device. So I just would ask to really avoid a lot of those difficulties or technical difficulties, you know, that you use a laptop or a desktop and so forth. Next, active participation. I will prompt you with 5 poll questions throughout the course here today. And we need, in order for us to provide you with the credit, you need to actively participate when prompted, okay, so 100%. It's as easy as just going on and answering the questions that I provide. It's not important that you answer them correctly, okay? It's that you are actively participating in that. So participate, and I will prompt you along the way when we're ready to do that. Lastly then, many of you probably this morning that had registered early had received information in regard to the attendance sheets. For those of you that had registered late, no worries. We will get those attendance sheets to you. But just one thing to note, in order for us to properly get your credits in for each state, those sheets, attendance sheets, must be completely filled out, signed, and return no later than the end of day on Friday, March 7th, okay? So those attendance sheets are very important, simple. It's your information, license number, NPN number, signature, date, and so forth, and get that into us, okay? And you can just scan and send that back to us. So those are the requirements for today. And one other thing as well, as far as how we normally handle our webinar, what we have always tried to do is we are recording this presentation, so it will be available for viewing at your own leisure here, and that generally will be sent here by the end of the week. We plan on doing an FAQ for the questions that do arise throughout the webinar and provide that to you as well. Provide you a copy of the presentation deck. So at the end of this week, you should have in your possession all of the information you need so that you can kind of go back, review some of the things that I'm kind of covering here today here for, you know, really at your own leisure, okay, as you need to. So let's look at the, whoops. Oh, and lastly here I have, you know, take notes and certainly enjoy. So let's look over the agenda here for today. We do have a lot of content, so we've got plenty to cover here in an hour, and but we want to just touch briefly on some legislative updates. These are updates that really have occurred here just in the last 6 months that I want to touch on just briefly as far as some recent updates. And then we want to dive into these basic payroll fundamentals in regard to benefit administration, how payroll and general ACA compliance requirements can be maintained. And we're also then going to focus on the payroll and how it interacts from an individual mandate perspective, a small employer perspective, and then a large employer, clearly from a large employer basis. So let's go to our first poll question. So what I'd like everyone to do is go to their computer, and we are going to go over this first question. All right, so as you can see on your screen, you can begin to go ahead and click which is the right answer, what you think is the right answer. So the employer mandate will affect what size of employer in 2015? Is it for 50 plus full-time employees, A, B, 100 plus full-time employees and equivalents, C, 50 plus full-time employees and equivalents, or D, none? It was delayed for all employers until 2016. So take a moment. I want to make sure that everybody gets involved. This is our first activity here, so I need everyone to vote. All right, we'll just give it here a few more seconds. You guys are doing fantastic. Doing very well. Going to just give a few more seconds, so get right in there and vote. All right, we are going to close the poll here. All right, and now I'm gonna share this here. Let's see here. All right, so what you see here, pretty interesting. The correct answer is B, 100 plus full-time employees and equivalents is the size of employer in 2015. 49% of you got it correct. 26% said 50 plus full-time employees and equivalents. That is something that actually will be triggered in 2016. So let's move on. Well done. That's good. That's a good first. First try here. All right, let's move on here with some legislative updates. One of the first things, and I just want to touch these relatively quickly, but certainly something that I want to keep fresh in your minds. These are very important items that we continue to receive many questions in regard to each of these. So the first is flexible spending accounts. You know, the number one objection for an individual or an employee to not participate in a health FSA account is, and everyone together, the use it or lose it rule. Yeah, very good. So the use it or lose it rule has been the number one objection. It has reduced the number of employees who would participate. It has reduced the amount of contributions over the years that someone who is a participant would like to contribute, just due to that lose it rule. And so at the end of last year, a very welcome provision was added, and it's a $500 rollover provision for the health FSA. And it enables an employee to be able to contribute up to $500, well, actually contribute up to the maximum amounts according to the plan, so a maximum of $2,500, but be able to roll over up to $500 into the subsequent years. This is huge. You know, this is something that from an employee basis, who in today's age with health plans that have so much out of pocket, here's a great opportunity for an employee to at least set aside $500, and even if it's not used, it can roll over from year to year to year. A couple things to note. The employer may adopt the rollover provision, but they need to amend their plan, and they either need to include the grace period or include the rollover provision, okay? It's either or. They can't have both. So begin to talk to your employer groups in regard to the FSA. It's a great opportunity for the rate of participation to increase, and not only the number of employees, but also the amount of the contributions, which would equate to additional or much higher FICA tax savings for employers. So the FSA, the rollover provision, now is a great time to begin talking to your clients about the FSA rollover. Next, and this is probably one of the biggest areas of confusion that we hear or continue to hear out on the street with our broker partners, and that's pre-tax premium reimbursement accounts, or even more narrowly defined, using pre-tax accounts to be able to reimburse or pay for individual medical policies. Okay? So under ACA rules, under guidance that had come out from the IRS and Department of Labor in September of 2013, it is very clear, so much less debatable today, that you can utilize a Section 105 plan, which would be an HRA, and a Section 125 plan, which would be either a premium reimbursement account or a POP plan, to be able to pay for or reimburse individual medical premiums. The guidelines that were established have stated that in order for an HRA to be utilized, or a premium reimbursement account, in essence, it must be integrated with a group health plan or be reimbursing accepted benefits. And accepted benefits would be standalone dental or vision plans or premiums. It could be a retiree-only HRA. Could be premiums for maybe limited medical, like hospital indemnity plans, things of that nature. So under current guidelines, a premium reimbursement account cannot be used to pay for individual policies. Do not be confused with, from an HSA perspective or an FSA, reimbursing out-of-pocket medical expenses. What I'm referring to is the individual premiums. Those policies, individual premium policies, are affected. Next, the employer mandate delay. So as you saw in my question, it's kind of leading, but there was a delay that was announced here on February 10th, and it affects or grants an additional 1 year of delay for employers that fit in this category, 50 to 99 full-time employees or equivalents, okay, for the 2015 plan years, all right? Also, what was changed was that for those applicable large employers for 2015, that they would only need to cover, although there's an asterisk by it, but they would only have to cover 70% of the benefit eligible, those full-time employees for the 2015 plan years. Now in 2016, we kind of moved back to the employer mandate, in general, where, the 50-plus full-time employees or equivalents will need to comply with the employer mandate. And they would have to cover 95% of full-time employees for for employee and dependent coverage. Okay, so the employer mandate, very important that you get your arms around that. I think based on the question, there were still certainly some questions. So in 2015, we really are looking at 100 plus full-time employees or equivalents, okay, for the 2015 plan years. Lastly, and this is something that we have I guess I wanted to bring to your attention because here at PrimePay and part of our third-party administration services, we are seeing more activity in this area. And so this is really an opportunity for me to just kind of shout out to you all that you need to definitely begin doing your due diligence with your employers in regard to the health and welfare benefits, Cobra, but just that benefits in general. Sit down with your client and get a solid understanding as far as what they are providing, what they're not doing. Are they providing what's needed under Cobra? Do they have documents in place, SPDs, SBCs, all those fun acronyms? The audit activity for the health and welfare benefit side has been increasing. The IRS 2 years ago now had announced that they are now conducting Cobra audits, and so it is important and a great opportunity for you to show the breadth and strength of your compliance efforts as you talk to your clients about their due diligence and what they are doing. So I want to just mention that because even in 2014 we've already seen a number of audits. So there's definitely some activity that's being created in regard to the health and welfare benefit side of the aisle. All right. So I want to take a moment here and kind of dig here a little bit in regard to the payroll fundamentals for benefit administration, and I want to cover a few things. And so you see a lot here on the screen, and I'm sorry for all the content, but we'll go through that. You'll get a good understanding here of what I'm talking about. what I want you to begin to think about is, each employer client group of yours is either performing their payroll in-house, maybe they have their own proprietary system. Generally speaking, they're outsourcing that administration. And I want you to think about payroll not in a sense of just doing the weekly paychecks, paying wages for the employees, but think about the data that is within payroll, and possibly how your clients may use that data to be able to manage ACA compliance. Okay? So there's certainly, as I go through some of these things, it's going to trigger some things in your brain that you're going to go, oh my word, our agency, we can do that, we can handle that, we could take care of that for our clients. Or there's other areas where you say, whoa, hands off, I can't touch, that specific data, I don't know how I can help my client, maybe in that area. But what I want you to begin to think about is the value-added types of capabilities or solutions that you might, as an agency, might be able to deliver here to your clients. So as you think about payroll here, we think about the first bullet point that says new hires terms. One of the first places in that an employer is going to go when they add a new hired employee or they terminate someone is generally within payroll. And so what if you had an opportunity to be able to receive a new hire report or a termination report directed from payroll? Wouldn't that be a nice opportunity for all the new hires if you got a listing of everybody hired in the previous month and you have their dates, and it gives you an opportunity to reach out, say hi, mention what you guys are doing for the employer and for the benefits at that company? I mean, there's revenue opportunities in that. But also secondarily is terms. Many of you, if I had an ask for hands raised, right, you all would say, oh my word, I never get the information, the termination information from my employer in a timely basis at all. Okay, well, what if you receive that from the payroll solution that the employer is providing and you see all the terms immediately? This can help tremendously in bill reconciliation, certainly in Cobra audits, where this new hire and term report can be quite vital. And usually it's the first thing that's entered by the employer. As we think about POP amendments, Section 125 amendments, in the day and age of Obamacare, the Affordable Care Act has permitted employees or individuals to be able to go to healthcare.gov, shop around, look for coverage, possibly receive a subsidy, a credit for their premiums. Well, the premium-only plan, the language within the premium-only plan, if the employer will allow kind of a mid-year change with that type of an event, language needs to be changed. So you need to think about the amendments for a premium-only plan if they are changing the open enrollment rules. I've already discussed the FSA and the rollover, but one thing I do want to confirm with you is the group health plan integration. This has been a question that has come up, and so due to ACA and HIPAA, we need to talk about accepted benefits. One of the requirements that an employer may have a health FSA is that they do offer a group health plan. So an FSA that is in coordination with or integrated with a group health plan of the employer, so employer-sponsored coverage, they're permitted to have an FSA. If an employer does not offer a group health plan, you cannot have a health FSA. All right? Can't be more clear about that. So when you're digging into payroll, you're looking at deductions and you see that maybe it's a prospect and you see that they have a health FSA deduction or a dependent care deduction, clearly you need to ask those questions, if you didn't know already about their group health plan status and so forth. What also you find in payroll for the FSA is how they might be handling, or you might find out how they are handling employer funding. As you see the deductions through payroll, you can ask the question, well, hey, employer, how are you managing the transactions for payroll? Are you handling it in your own account, meaning all the debit cards and claims are hitting your account, or are you utilizing maybe an escrow account or an account held by the vendor, the payroll company or the vendor of the TPA? Great question, so that you get a better understanding of how their FSA benefit works, which might enable you to find out ways to help them. Lastly then is non-discrimination testing. Virtually, all of the information needed, there are a couple things, but virtually all the information needed to perform the non-discrimination testing requirements for an FSA can be found in payroll. And so a great due diligence question with your employers when you see that they have FSA deductions within payroll, confirm that they're doing the test. It is a requirement. Non-discrimination testing is required for every plan that is out there. Don't be confused that just because you have fewer than 100 participants in the Health FSA that you no longer need to file Form 5500, right? Which is true. But that does not mean that the non-discrimination testing requirement has been removed. So utilize payroll to have that discussion with your clients. We discussed as well information about premium reimbursement accounts. It should be generally a separate deduction in payroll. So if you're reviewing the pre-tax deductions, you should notice whether a premium reimbursement account is being utilized. This is going to enable you tremendously to be able to work with that employer, either getting them on the right path if they are trying to reimburse individual medical plans, that they can no longer use the PRA for that. But also, too, if the employer that you're speaking with is a small employer that does not need to worry about, you know, the penalties, they can offer insurance or not offer it, and it's not going to matter to some degree. A premium reimbursement account strategy or a defined contribution strategy might be utilized, and so this might give you an opportunity as you look at that payroll information to be able to look at maybe pre-tax accounts for other accepted individual or accepted benefit individual policies. Next is HSAs. Health savings accounts, one of the best ways to manage and maintain HSA contributions is through payroll. Deduction management and limit management really can be contained in the HSAs. You know, clearly HSAs run under section, or generally can be contributed under Section 125 of the 125 plan from the employer. But in the same token, an employee can actually save the most, right, in taxes by contributing through that Section 125 plan and through payroll. So employers permitting the contributions through payroll is huge, and I think it provides you a great opportunity to be able to look through that specific payroll deduction information and determine, hey, how's the participation level? Why, you know, here employer, you offer an HSA compatible plan, but I only see 3 people in it. You know, what do we need to drive education in this area to get more contributions in this area? It's also a limit, it manages the limit for the HSAs, because once the annual limits have been hit, it can be turned off, you know, directly in payroll. So it helps kind of prohibit the ability for someone to kind of go over those annual limits for the year. Cobra audits, I did talk a little bit about that here already as you look at the new hire and the term report to really, as you match up that report with your carrier billing, you really get a good sense as far as, you know, do we have all the information needed with the carrier? Have we termed the people that we need to term? In fact, are people still supposed to be on Cobra? Has it been too long? Has the length of time lapsed that they no longer should be on Cobra or offered Cobra? So it's a great opportunity for you through payroll, through the reports in payroll, to really drive a solid Cobra audit as well. Determining life and disability, right? You all know that, you know, from a premium basis, possibly from a guaranteed death benefit basis, salaries are important. So compensation clearly is located within payroll, resides in payroll, and would enable you in your analysis to determine, hey, well, what's the best death benefit that's right here for this group, you know, so on and so forth. So that's a tremendous help. One of the big areas here as well is in the use of voluntary products. Clearly a revenue generator for you all is the opportunity for you to sell more voluntary products. And whether you're prospecting for, you know, with a particular prospect, someone you want to do business with, or a current client, examining the payroll information provides you with clear understanding as to who's participating. I mean, let's say this, you might be the broker of record on the medical, the major medical plan, but you are not the broker of record on the dental, on the disability, on this or that. Well, having the ability to look at the payroll information and the deduction activity will help you determine, hey, you've got 45 employees here. You have 6 people on the dental plan. What's going on? I might be able to provide a recommendation as to how they might be able to increase those participating in the dental premium. So there's some revenue opportunities in the voluntary product market by looking at payroll. Domestic partner audits with DOMA, clearly the change, at least from a federal basis, that has been somewhat resolved, but you still have some state issues with that. The IRS still uses the domestic partner term, and so I kind of kept that in there because right now I don't know if everyone's figured that out yet as far as what's going on. So that is certainly something that needs to be monitored and maintained. And then lastly, if you're in the financial planning market, certainly retirement plan deductions, 401k deductions, that information is posted, which would provide you a lot of information as to the level of participation and their contributions. All right, let's get into some general ACA compliance, but before we do, we are going to launch our next poll question. So I need everybody to head to their computer. All right, and we are going to our next question. All right, so as you see the information here on the computer, go ahead and go to your computers and vote. So the question is, ACA requires employers to report which of the following on their W-2s? So this is the ACA reporting requirement. Is it A, and just check all that apply, long-term care premiums should be reported? Is it B, employer-sponsored medical premiums? C, HRA, or health reimbursement arrangement premiums, D, dental and vision premiums, or E, the employer contributions to a health FSA. So you can check more than just one, so check all that applies, and we'll give you a moment here to provide your answer. You guys are doing great. All right, keep going through that. Again, this is important, your participation, and this is important in regard to your activity for the CE. Go ahead, and I will make sure everybody gets accounted for. Again, you guys are doing great. This one's a little tougher here for you, huh? All right, all right. Guys are doing great, though. Okay, I'm going to close it here in just a couple seconds. All right, I'm going to close the poll. All right, so let's share this here. So as you see here, as you look on the screen, we'll wait here for the screen to pop up. The two areas, so B is in boy, the employer-sponsored medical premiums, and E, the employer contributions to a health FSA. If you put that down, you are correct. Those two items. HRAs, dental and vision premiums, long-term care premiums are not required to be reportable under the ACA reporting requirements. Well done. All right. So as we get here to the ACA, we want to talk a little bit here about the W-2 reporting. There's been not really any additional information recently as far as just recent changes, but I do want to cover some of these with you because as to the poll question, it's clear that there is some confusion here yet on this. So a couple things that I want to point out. The W-2 reporting the transitional relief states that employers issuing fewer than 250 W-2s in the preceding calendar year are exempt from the reporting requirements. So I put a note here, an important note, how many W-2s were issued. One thing that I always want you to keep in mind is that it does not have anything to do with benefit eligible employees, okay, which is what you might see on a daily basis from that employer. What you need to be concerned about is how many W-2s do they really issue? You could have an employer with 175 employees today, but due to their line of business, turnover, what have you, they could have well issued more than 260 W-2s in the preceding year. So ask the question, if you know that the employer might be sitting on the bubble, it is based on the W-2s that are issued, not necessarily the number of employees that is being shown at a current time. So what is reportable on the W-2? Major medical plans, basically that Cobra premium. So your 100% of your Cobra premium for single, for family, employee plus 1, 2, and so forth. Okay, so it's that premium. Next, the employer contributions to a health FSA is required. So, not every employer certainly provides a contribution to the health FSA, but if they do, they would report it here. And then what's also required, but only if the employer charges a Cobra premium for it, and that would be a qualified on-site medical clinic or qualified EAP and wellness programs. And I've also included then domestic partner coverage is also going to be included in that. As of right now in the transitional relief, even with DOMA, that has still been stated. And so that information would also need to be reported as well. What's not reportable? We covered it's everything else, right? So not reportable, long-term care, standalone dental vision, employee FSA contributions, although if it's run under a cafeteria plan, which it would be reflected in box number 1, okay? So it kind of would be reported to some degree. Health savings accounts, clearly that information is reportable on the W-2, but just not part of the ACA W-2 reporting requirements. AD&D, and then workers' compensation would also be included. So one of the next biggest thing as we think about payroll, as we think about kind of the fundamentals of payroll and the applicable large employer. At this point in time, many of you certainly clearly have a solid handle on what an applicable large employer needs to be. But payroll is very important, becomes very important in determining or helping an employer determine if they are considered an applicable large employer. So let's kind of go here from the top here a little bit. Employers must determine whether they are considered an applicable large employer, all right, by tracking their full-time employees and total hours worked by their variable hour employees. One of the things that I want to mention, and I bolded it here, is that this is a calendar year determination, regardless of when the plan year resides for an employer. The determination of whether you're going to be considered an applicable large employer is based on a calendar year. Now, for the 2015 years, plan years, which affects 100 plus, right? So 100 plus full-time employees and or equivalents. In 2014, an applicable large employer may use any 6 consecutive month period. Okay, so any consecutive month period, 6 consecutive month period to determine whether they are going to be considered a large employer. So as you look at this, just kind of break it down, the applicable large employer in 2015, so at least 100 full-time and or full-time equivalent employees. Some definite things to consider. It's hours worked and intended to work. Full-time equals, it's based on 30-hour work week for full-time employees under the employer mandate, and full-time equivalents would equal the full-time employees plus total part-time hours worked per month divided by 120. And yes, before anyone tweets or asks the question that my calculation is wrong on the 120, it's 120. So it's divided by 120, that's per month. It's 1440 for the year to determine your full-time equivalents. Seasonal employees, not counted at all if working less than 120 days per year. So the full calculation there for full-time employees would be the full-time employees plus the total part-time hours per month divided by 120. Then you can annualize that out, okay, as needed throughout the year. So based on the full-time equivalent, which will be a fractional number, you round down to determine your full-time equivalents. So what I want you to think about here is that many of you might be thinking in the benefit eligible space. You could have an employer today that is at 92 benefit eligible folks, and you're not necessarily knowing maybe how many variable hour employees that employer does employ. And so they could easily carry 20 or more variable hour employees, which would put them in the applicable large employer status. So this is a great opportunity for you to be able to capture that information. Also, this information, as far as all the number of employees, are all found in payroll. That data is all found there. And so the determination of the applicable large employer is a critical piece, kind of the first step, right, in determining whether that employer is going to need to comply with the employer mandate or not. All right, we are going to go to our next poll question. Get to your computers. And I'm going to launch this so everybody get to their computers. All right. So the next question is this, a yes or no or unsure. Will two or more companies that have a common owner be combined for purposes of determining whether they are considered an applicable large employer? Yes, no, or just unsure? So when you think about an employer that has multiple companies, right, affiliated companies, are they to be considered or to be combined for purposes of determining whether they are considered an applicable large employer? You guys, I think, are having an easier time with this one, possibly. Doing great. Just give you a few more seconds here to input your answers. You guys are doing great with this. Thank you. All right, just a couple seconds. You guys are doing awesome. All right, I'm going to close the poll. All right, let's share this. So 79% of you answered yes, and you are correct. Well done. So 11% of you said no, 10% unsure. So let's just dive into a kind of an important note that I want you to consider. So if two or more companies have a common owner, or are otherwise related, and I will say that the IRS has really provided a broad definition of common ownership, controlled groups, right? I mean, so I think that we need to have the employer refer to their tax advisor, what have you, in relation to whether they have a controlled group or common ownership, for purposes of determining this. But they will be combined for purposes of determining whether they employ enough employees to be subject to the employer mandate provisions. So think of this. You might be working with an employer group that has 54 employees, and you might be working with that owner, and you think you're fine for 2015. Hey, we are not going to need to comply with the employer mandate. But maybe unbeknownst to you, maybe you hadn't asked the questions, you determine, or it has been found that they actually have two other companies or one other company of significance, maybe with over 100 employees. And due to this requirement, those two companies or more would need to be combined to determine if they're an applicable large employer. And it could make the company that you're working with, the one that you have broker of record on, to where you would actually, it would actually be considered a large employer as well. A couple exclusions that I want to mention. ACA, the term employee excludes seasonal workers, so that is the 120 if they do not work at least 120 days. All right. They've also excluded, in the term of an employee, a self-employed individual, a 2% shareholder in an S-corp, 5% owner of an eligible small business, or someone who has a relation or dependent of someone who falls into these categories, like a spouse or, a dependent, okay, of some kind. Let's look at the individual mandate. Now, many of you might say, well, Steve, I mean, how does payroll come into play in regard to the individual mandate? So let's touch on this here a little bit. So first, for an individual, the new rules under ACA says that you need to be insured under minimum essential coverage. Okay, so what counts as minimum essential coverage? So just a couple things here to review with you as we dive into this. That's going to count employer-sponsored coverage, so that's fully insured plans. That includes also your self-insured, your Cobra, certainly plans, retiree plans would also count as minimum essential coverage, but also individual policies today clearly will have that coverage, have that minimum essential benefits, Medicare Part A, Medicare Advantage, CHIP programs, etc. So one of those key requirements for any individual, or the individual mandate will kick in regard to a penalty for that person, they need to have that minimum essential coverage. Next, individuals who purchase coverage through the health marketplace or through healthcare.gov may be eligible for financial assistance in the form of premium tax credits. So I know many of you are aware of that, right? So generally, if a household income falls between 100% and 400% of the federal poverty level, they generally are going to qualify, unless they have the other minimum essential coverage, right? They're going to qualify for a subsidy. Now, I understand that before anyone corrects me as well, with states that have maybe expanded Medicaid, you know, that number is different, right? From 100%, maybe it's 138, that type of a thing. But generally, 100% to 400% of federal poverty level, that is going to come into play. So, in getting to my key point, I think one of the key discussions that you will have with your employer, certainly if they're a small employer, they might be debating whether to offer coverage, not offer coverage. You know, the decisions that they make is going to potentially force their employees to make decisions outside of the employer-sponsored types of benefit coverage. And so an employer needs to understand that if they're making a contribution amount, they need to understand where that employer contribution amount sits. Because as you see here as part of the key point, contributions, the employee's part, cannot exceed 9.5% of their Form W-2 wages or the employee's rate of pay or the federal poverty line towards the lowest cost single coverage plan. So in the original ACA language, they talked about the employer mandate where the employee cannot pay any more than 9.5% of household income, but a safe harbor has been put in place for these three items. And so as you think about payroll, the data that is found in payroll, an employer needs to know, okay, I am going to offer coverage. Now, whether they want to make it affordable coverage, that's up to them at that point. But they can pull that data directly through payroll, and it's going to let them be aware of where that sits, okay, with each and every employee. Now, the last one I've put in, because this is so important. Well, guess what? When an employee of one of your clients goes to healthcare.gov, and let's say they receive a subsidy, there will be verification, a procedure in place brought forth by the IRS that is, one, going to confirm with the individual, but two, guess where they're going next? The employer. And so as an employer, you're going to need to have this information in place to state back to, in case of an audit, be able to say, no, look, I offer coverage, I offer affordable coverage, here was the individual's anticipated wages or the wages for the year, and clearly they did not exceed 9.5%. So the individual mandate, although an employer might offer coverage, what becomes very important is understanding their contribution level, and I'll talk a little bit more about that here as I get into the affordability. Small employers, I'm going to go very quickly here with the healthcare tax credit. Payroll provides the information for an employer to determine whether they're going to qualify for a healthcare tax credit. So, as you're working with small groups, and I'm going to say, so the groups that fit the eligibility for the healthcare tax credit, you're going to need to have that conversation. Why? Because if they do qualify or want to qualify for the credit, they're going to need to begin to enroll through the SHOP program, right? So at least for plan year starting November of this year. If they are not going to qualify, it opens up your avenues to look where you need to look to find the right benefit, the best benefit offerings that the employer will need for its employees. So it is a very important topic to have. And so let's look just very briefly on the eligibility. So the employer must cover at least 50% of the cost of single coverage for each of the employees. You must have 25 or fewer full-time equivalent employees, average wages of less than $50,000. and that's indexed here in 2014 to 50,800, so that'll be for next year for taxes as you do your taxes for 2014. Starting in November of 2014, you must purchase coverage through the shop, and it is eligible for 2 consecutive taxable years. The tax credit is enormous. I mean, it's a nice tax credit if you can get it, all right? So 50% for small business employers, 35% for the nonprofits. And I say that kind of tongue-in-cheek because it is a progressive structure. The credit benefits the small, if you have a small number of full-time equivalents and the lowest amount of average annual wages, you're going to receive the highest credit. But as you increase the number of your employees, as you increase your average wages, that credit gets diminished quite a bit. And so this conversation, you need to have it. You have to have it with your employers, but it really is going to enable you to kind of determine what the next step is after that. So large employers, one of the biggest benefits of payroll, I would say from the data that is contained in payroll comes out as actually greatly benefits the large employer. Large employers are going to find it very arduous, a very arduous administrative task to be able to maintain a lot of the requirements that ACA has put forth. So what I'd like to do is actually go to our fourth poll question. So everybody come to their, everybody get to their computers. All right, here we go. So here's the fourth question. You guys are doing great. Does ACA require full-time employees to be tracked through the measurement periods just like similar to the variable hour employees? Yes, A, B, no, or unsure? Go ahead and hammer through that. You guys are doing great. Give you a few more seconds here so that you can enter the answer to the question. I hope that you guys are sitting here as you read it going, it's actually a pretty good question. It's a little bit of a trick question, I might add, but let's wrap up here. Just a couple more seconds. You guys are doing great. All right, I'm going to close the polls. All right, we're going to share that here with you. So 62% of you, so the majority, say yes. And those that say no, about 33%. Those that say B, no, you are correct. All right, so we're going to dive into this here a little bit. Let me hide this here a second because it's a very good question. As we think about tracking employees, a very common question that we have received is, I mean, you know, we've talked a lot about tracking employees. The ACA requires that large employers track their employees, but to track their variable hour employees, so those employees working fewer than 30 hours on average each week. However, I will dive into some of the information in regard to why an employer will want to track all employees. Okay, so if both of you answered, you know, the A and B, I mean, you're both correct, but does ACA require you to track the large employers? No, not a requirement, but you will want to because of the audit structure that the IRS will put in force. So large employers must track their employees 30 hours, so on average, you know, those working 30 hours and fewer each, well, up to 30 hours per week, or at least 130 hours per month. You need to include the hours worked, hours paid, but not worked, so things like vacation, leaves of absence, sick days, etc. You have the ability through the tracking mechanism to exclude owners, family members, seasonal employees, all right? And the IRS has made recommendations as to a model on how an employer can track their employees, either for ongoing and newly hired employees. Now, for those of you that did not attend our webinar last month, I took a very deep dive into tracking employees, measurement periods. I do not want to take the time today and dive into that. But payroll, when you think about just this page and tracking the hours per week, one, you've got to track new employees, newly hired employees, and you need to track your ongoing employees through the various periods and track their hours. Well, how do you do that? And so in this, and I'm not going to, again, take a super deep dive, but one quick example as to how this looks. We have a company here that has their health renewal falling on March 1st, 2015. This employer, based on the type of business that they have, has chosen a standard measurement period and an initial measurement period of 9 months. Their administrative period is 3 months, and the stability period is 9 months. Okay? So think about this. As we think about an employer, right, that in 2015, March of 2015, will have more than 100 full-time employees and or equivalents. So they would be required under the employer mandate to track these employees. And so, as I had shown last month, but just a quick picture here again, if this employer chose a 9-month standard measurement period, they are going to want to begin their measurement of the variable hour employees as of March 1st, 2014 for the next 9 months. I then just chose a 3-month administrative period, which is the maximum, so on and so forth. And then you can kind of see as you go down the path, just that the standard measurement period is always on the same dates. It starts and stops on the same dates every year. But you also have the initial measurement periods going on concurrently. This employer could be hiring 10, 5, 30 people in 2014 and 15. And each one of those new hires is going to carry its own initial measurement period, administrative period, and then stability period. And so what I would ask is that you take a deeper dive into our February webinar that goes into this, that is on our Broker Concierge YouTube channel. Affordability. So this is a big one. Many of our employer clients have stated, well, look, Steve, I mean, I want to offer coverage. I'm going to offer coverage. But what's important to me is that I am providing it to my employees in an affordable manner, or at least as has been required under ACA. So under the employer mandate, as you know, employers can, in effect, roll the dice, right? If they don't offer coverage, they're rolling the dice in a big way, because that $2,000 penalty could be huge, okay, just by not offering coverage, all right? But then you also have the play side of the aisle, where an employer can offer coverage, but then, forget it, I'm not making it affordable. Let's just see who goes out and receives a subsidy, right? So they could play, but not play entirely, or they could play entirely. So let's just look at a couple of the examples, because all of this is found in payroll. Within payroll, you've got a list of all the employees. You've got an idea of what their anticipated wages will be in the coming year, which would truly help an employer decide, how much do I need to contribute as an employer to ensure that my employees do not contribute more than that 9.5%. So in one respect, as you see here at the top, the employer decides not to offer insurance. Well, clearly, you're going to pay. And in 2015, that would affect 100-plus full-time employees or equivalents. And then that $2,000 would apply. If an employer decides to offer insurance, that is a play scenario, but it still could be a pay scenario if you do not make it affordable. So it does cover those employers, 100 or more full-time employees or equivalents in 2015. And then the employer must do these additional items in order to make their coverage affordable. They must offer coverage to at least 70% in 2015, 95% in 2016 under the new requirements. Must offer coverage of its full-time employees and their dependents. Does not include the spouse. They must also provide a plan that pays for at least 60% of covered expenses, right? So they have a plan that has to meet those minimum value or actual aerial value requirements of the 60%. And then lastly, which is a huge one, and where you can truly use payroll to come to a quicker determination of the affordability calculation, is that the employee's required contribution for self-only coverage, okay, of that minimum value plan must not exceed 9.5% of their household income. That's the stated regs. But under the safe harbor, it would go towards the W-2 of that employee. And it's of the least expensive single rate. So if you have multiple minimum value ACA compliant plans, it would be the lowest single rate type of coverage. So now, if those conditions are met, if a subsidy is given, then the employer now is only being penalized of $3,000. So I just want to state, so this is one of the biggest reasons why an employer would want to track all employees through those measurement periods. And the reason is that there are going to be employees that decide, you know what, for whatever reason, good or bad, we go to healthcare.gov and somehow I've qualified for a subsidy. But here the employer who's measuring, tracking, knowing where their contribution rate is, they say, well, no. I mean, I offer coverage and I offer affordable coverage. And so an audit will occur. And I think that from an employer perspective, they're going to want to track really 100% of their employees through this process in order that the affordability is there for each and every single one of them. So as we look at kind of everything that I've kind of gone over here today, we have this final piece before we get to our final poll question of the course. So what is the missing puzzle piece for ACA compliance? I think that I might have made it very visible to you throughout the process, but let's have a quick review and understand what is this missing puzzle piece that can really help you and your employer groups with these ACA compliance measures. So as we look at the FSA, the PRA, HSA, Cobra, retirement plans, voluntary benefits, that deduction information, the terms, the ads, the new hires, that's all populated right in payroll, and it's done so efficiently, effectively, immediately from an employer perspective. This can greatly help you with bill reconciliation, managing deductions or the limits for those deductions, determining eligibility, making sure we have the right Cobra people to the right terms in the system, the new hires that need to be counted, and so forth. And then clearly the new hire reports or termination reports is very vital. So where do you find that? The data, it's found in payroll, okay? So it's right there. Next, W-2 reporting. Again, it's reportable, it's not taxable. It does go into box 12 with code DD and you identify the amount right there in box 12. But W-2s are clearly a payroll-driven activity, but you can also be very much involved in helping the employer understand if they need to comply and then which specific benefits need to be included as part of box 12 when they do report the employer-sponsored coverage. So where do you find all that information? Data is found in payroll. Interesting. Okay. So the small employer health care tax credit, as we talked about, we need to determine the number of full-time equivalents, and we also need to calculate the average annual taxable wages. There's one other piece to that, is that the employer does need to contribute at least 50% of that single rate, right? So, I mean, that's in there. But by looking in payroll, you can quickly drive the estimation of what that tax credit is going to materialize for that employer and enable you to move forward with whether it's going to be enrolling through the SHOP coverage or whether you're going to actually do it outside of SHOP entirely. So where can you get that information? Aha, yes, that's right. It's found in payroll. And lastly here, the employer mandate requirements. Again, the largest, probably arduous administrative task for the employer is the measurement of its employees. So one, you need to determine whether you're an applicable large employer. That's step number one. That information is directly tied through payroll and the data in payroll. Measuring variable hour employees, you can calculate your affordability, whether the coverage you are offering is affordable through payroll. You can also quickly determine with the calculation whether we need to add other affiliated companies as part of a common ownership or controlled group status. And so we're going to look at metrics such as the status of the employee, the exclusions that exist, whether you're an owner, whether you're a seasonal employee, maybe you're a spouse or a dependent of that you would be excluded. The measurement periods, average hours worked, the anticipated annual wages, all of these things are found, that's right, in payroll. So as we think about this, and as is the title of our webinar today, payroll truly helps employers effectively manage the ACA compliance. All right, so our last poll question, and I need all of you to get this right. All right, hang on. Let me get it. Pull it up here. All right, let me launch this. All right, so the last question, what is or are the best sources that an employer can utilize to help them with full ACA compliance? Is it you? Is it the payroll service provider? Is it an ERISA ACA attorney? Or is it all of the above? So go ahead and put in your information, and I'm going to put an emphasis on one of them, and it may be actually one that you're not thinking of right now. All right, go ahead and continue to enter in your picks. You guys are doing great here with this. Just give a few more seconds here for all the votes to be tallied. All right, you guys are doing great. Okay, I am going to close the poll. Let me share that. So 81% of you stated all of the above. All right, well, fantastic. And actually, none of you got it wrong at all because you all chose the answer that is correct. But one thing that I want to focus on as I think about just a review, in that question, I listed you first, benefits professional. You are one of the most critical puzzle pieces. If I can name a puzzle piece, you are extremely critical because you have the ability with your knowledge and expertise to really drive a lot of the correct solutions and provide them and make them available to your employer. You need to get to know who your employers are utilizing for their payroll services, not as a self-service question or a statement from PrimePay. But do you understand truly how your employers have engaged their payroll company and are they getting this information from them? If not, you need to find out how you might get engaged to help your employers with this compliance, and then be specific how you can help. You know, hey, you might have looked at some of these things today and say, Steve, my agency, we don't do that. We can't do that, or we're not going to go there for whatever reason, whether it's E&O to whatever. But you do need to be specific as to how you can help your clients. Think about solutions and revenue generation that this analysis can create. You have opportunities by looking at the data that's found within payroll to create additional revenue opportunities with voluntary benefits and many other things. Audits, they are increasing. How will your firm, and I mean this extremely with so much seriousness, how will your firm provide strong and comprehensive due diligence in this area? Your employer groups will be faced with more of these types of audits. You need to ensure that your clients are doing what they need to do, that they understand those ACA obligations. Don't forget those employers sitting on the bubble. I want to mention it again. Remember, all employees. Your focus might be just on the benefit eligible employees, and understand that there might be an employee base of variable hour employees that you're completely unaware of. Oh, let me hide, and I do apologize. I actually hid the screen that I was dealing with here. So what I just went over there is the screen here as far as the reviewing with your clients. So again, don't forget those employers that are sitting on the bubble. You need to remember all the employees, not just those benefit eligible. We hear that a lot, and I think that's a very good piece to kind of understand. So lastly here, as we wrap up our course today, I want you to keep in mind here up above the attendance sheets. For those of you who did not receive the attendance sheets this morning, we will be sending them out again to you, all right? And it's a PDF. You can just fill in your information, sign, and then you can scan and send that back to us no later than the end of day on Friday, March 7th. What we will then do is we will post all of those credits for the states that you need it for, and then we will be sending you a certificate of completion, okay, of this course. So each of you will receive that. So with that, I look at the information, the questions that have been asked. You guys have asked some great questions. I've not been able to attack that here today, but we will be putting together an FAQ that will provide all of that information. So with that, that will conclude our CE webinar here today. I want to thank you for joining us and for taking time out of your busy schedules to sit with us today. Enjoy this time with your employers. ACA compliance, it kind of is a burden, but it can also create a lot of opportunities for you and your employer clients. So with that, have a great day, and we thank you for joining us. This will conclude our webinar.